Let's go over a gap fill strategy. So first of all, what is a gap? A gap is overnight price movement that puts you either above or below the top or bottom of the previous day's range. In the example on the screen, you can see this was the high of day yesterday. This is the price that occurred overnight, and we are opening above yesterday's high of day. So when that happens, probability is that gap is going to fill. Now, certain things that we can look at to help us figure out is if it's going to be a gap fill or if it's going to be a gap and go. I mean, first thing you would want to take a look at is there a catalyst? Is there some type of news events that could have caused this gap up, or did it just happen? If it just happened, I would say our chances of the gap filling greatly increase. Another thing, most gaps fill within the first 2 hours of open. If it does not fill within the first 2 hours after market open, the probabilities that that gap is going to fill greatly decreases. Another thing, let's say we had a green day. Let's say we gapped down the next day, meaning we went closed at the top here, went overnight all the way to the bottom of yesterday's range, and then gapped below that. That's a sign that's usually only going to happen with a catalyst, first of all. And then that's a sign that we've really got strong sellers. That gap may not fill. Um, And then we don't just want to blindly enter, like just because we're gapped up, we don't want to blindly enter into a short trade and assume this gap's going to fill. We're going to have to do a lot better than that. Gaps can be very deceiving. So we're going to want to wait for some type of confirmation and definitely have some type of solid trading plan on how we're going to trade that gap. Never just blindly enter. So after market open, we're going to want to look at like candle structure and see what the candle structures are telling us. Do we have strong green candles with no wicks moving up? Then maybe this gap isn't going to close. All right, let me go ahead and get into market open here. All right, first candle, we have a wick on top, we have a wick on the bottom. It broke the overnight high. We're not learning a lot from that candle. Next candle, equal wick on top. All right, so we do have some selling pressure up here at the top. Next candle, it didn't get any higher than the previous candles. So inside bar candles, sign that we may not be moving up. All right, now we have a strong red candle. So for my gap rule strategies, the first thing I want to see on a gap up, I want to see this overnight high get tested and price to fail to be accepted above that overnight high. So far, we have seen no price acceptance above this overnight high. The next thing I want to see to be able to enter into a gap fill strategy is I would want to see price get below the opening candle. And also, I would want to see risk reward of 1 or 3 or greater. But let's continue. All right, we're back up, but we do have a wick on top. Again, I mean, we're seeing selling pressure. All right, it went up and was pushed down, back down with force. I'm starting to think this gap's probably going to close, but we're still just got a bunch of inside bar candles. We haven't gotten below the opening print. Now we're below it. All right, if risk reward made sense, I would definitely be taking this trade. I would be setting my stop loss either above the overnight high or above the high of day. And I would be targeting yesterday's high of day. As you can see, risk reward here is about 1 to 2. All right, let's see how this plays out. It is moving down towards closing the gap. Let me promise you, gap fills are never easy. They might seem easy, but they're never easy. Price is always going to do some crazy stuff to try and psych traders out, get them to exit for a loss, or, still their positions. Now, me personally, I would have probably exited at this point, but full gap full. Let's see what happens. Pushing back up off VWAP, still going. If I were still in the trade, I'd be getting real nervous right now. Real nervous. Oh man, and now you'd be negative and you'd be freaking out, right? Well, here's another strategy people use is they wait for pullbacks off the opening candle. And you can see it hit that opening candle and had some rejection there with that upper wick. And that's a fine strategy too, if that's what you want to use. And there you go. The gap is closed. Now, whenever there's a gap close, the next thing you typically want to be watching for is a gap fill reversal. Gap fill reversal would typically look something like this. Got below yesterday high a day, and then you would target back to the opening print. Some other possible ways you would see a gap fill reversal would be, let's say, double bottom back to the opening print. Another one reversal pattern that you might see is an inverse head and shoulders back to the opening print. Something like this. So we're looking for something like one of these patterns here. See if we're going to get a gap fill reversal. I mean, that might be it right there. And honestly, I haven't even looked ahead to see if it works out in this instance. You would be targeting again the opening print. Let's see. Now you got a double bottom and inverse head and shoulders. And boom, did it make it? Oh, pretty close, pretty close. Not quite there yet. You got to deal with all this psychological terror before the trade works out. But as you could see, I mean, this is a great example on a volatile 2-minute chart even of a gap fill reversal pattern working out. So with the gap fill, we're looking for a test and failure of the overnight high, a move past the opening print, and risk reward that makes sense. Then we're looking for a reversal pattern. Typically one that looks like one of these things. Breaks below yesterday high a day, then you get a lower high above yesterday high and day, get an inverse head and shoulders. See, we have shoulder here, head here, shoulder here, or a double bottom. And really, we got a double bottom here as well. So actually, in this scenario, I can see all three of those patterns for the gap fill reversal. So, I mean, great trade. You made money going down. You doubled your money going back up. You can't beat it. It's a great strategy. You're welcome. Goodbye.